Ladies and gentlemen, Kim here. Welcome to the weekly update. Hope you guys had a good day trading today. Market is up about 0.7% there on the S&P. Keep in mind though, I am recording this intraday. As I record this video, market should be open for another 4 hours or so. But as I record this video, market is currently up 0.7% or so. Nasdaq about same. Looks like all these sectors are up. Semiconductor leading the way along with the transport. But looks like every single sectors are up today. Bitcoin pretty much flat. And the gold silver miners are up a little bit. And these guys are, VIX is down. And these guys are pretty much flat there. So in tonight's, in this Christmas special presentation, we're going to be looking at S&P 500 ETF, Spider, Russell 2000 ETF, IWM, and gold and Bitcoin. We're going to look at long-term perspective of things. What can we expect going into remainder of this year and next year? It is all coming up right now. All right, so let's follow up with what we've been talking about on the last weekend's video and this entire week, right? In this weekly video, obviously, I'm going to be looking at daily chart. We're going to go all the way back to 2020 lows, the March lows, the COVID lows. And we're going to look at the big picture, the primary term, right? We're no longer looking at 65-minute chart, looking at in the short-term movement of things. We're looking at the big picture, the primary, the long-term, which is very, very important. And if you guys remember, if you watch my video on the last weekend's video, we extensively and intensely talked about this potential double top pattern, right? There's a double top here. There's a double top here. There's a double top here. There was a double top here. Every single one of them failed to materialize, right? And I emphasize the fact that foremost dangerous words in investing are, this time it's different. And stupid people continues to say this time is different, but they forgot to realize they've been saying it for years. And they don't want to admit that this time was not different, just like last several, maybe even 10 years, looking at this macro trend of things. And so today, as you can see, it looks like Santa is on his way, save the day today, or this week here, right? So as you can see, as I zoom in here, little island bottom here, right? You can see that that's a gap down, that's a gap up. That gap still remains open. Let's annotate that together so that we'll know that gap, it still remains open here. Okay, here. Oh. That took a while to get that little gap thing there. So you can see with the little gap up, with the little hammer candle there, we gapped up, continuing today. We have a third day of follow through to the upside. We're back at it, right? If anything, it looks more like a double bottom there, right? I'm gonna check that out. That might be their double bottom. That looks like right on that support. Let's go back, just like what we did. You know what I mean? The last weekend's analysis, a little double bottom here, and that's a high low though, right? There's a significant. That low is definitely significantly higher than this low. Double bottom and then a higher low, and that's a recipe for trend to continue, right? This one, you can look at it like this. A little double bottom here and higher low, higher high. We talked about the last week, right? Oh, that's a definitive double bottom there, right? It never breached lower than this low, right? And it's pretty similar to what we're looking at today. You can see how we did come down. We never breached below this low right here. Never breached. And that's what bears needed to see, wanted to see. You can see Santa saved the day this week with that move there. There's one last one. I forgot to look back in May. Oh, and also here, this guy right here too. This wasn't quite double top, but this was double bottom right here, right? See this? Double bottom, higher high there, right? This one here, May, and this was, you know, like back in May, the sentiment, and you guys remember what happened in May and in April? Do you guys remember this, right? The words like the Great Depression 2.0 is upon us. Things like revisit to the March lows. You guys remember, right? Revisit to the lows, retest to the lows, back to the March lows. Things like the Great Depression 2.0 is upon us. Things like we'll never see the new all-time highs in our lifetime or next 10, 20 years. You guys remember all of this? Well, market always fools the majority. Keep in mind, S&P Spider was trading at 276 at the time. Today, Spider's at 471. He actually accumulated while everybody was in, you know, complete meltdown, psychologically and emotionally saturated with fear. Well, you've done pretty well. You accumulated 270s, currently trading at 470. So, well, we want to continue to give. And are we in an uptrend in overall, in the big picture, in a primary term? Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And none of you guys know what that means. And because of it, every single time we see a little bit of fluctuations, you resort to the fact that, well, I think this is it. And you know what this move is? You know what this move is? You know what this move represents? Do you know why we saw a move like this last 2 years? Market is making sure that you cannot come back in. If you didn't get in here or here or here or here, market made sure this year that you cannot come back. And think about this. Just think about it. If you thought that market was up way too much, way overheated, somewhere here, right? At around 320s, then there's no way you're gonna go long at 380 or 400 or 420, 440, 450, 460, 470. That's the point. Sometimes people like to throw things around like you can always go back in. No, you can't. Unless you're day trading this, which nobody should be day trading. 99% day trader lose. I don't care what they show you on social media, right? Go on Instagram, how many shenanigan stuff is out there, fake shenanigans out there. So keep getting faked out by these fakers and jokers. So nobody should be day trading, right? Unless you're day trading this, you cannot come back in. And that's the whole point of this rally that we saw last couple of years. You can see how double bottom, double bottom, double bottom, double bottom, double bottom, double bottom. Let's put that in there also. That's a double bottom right there. All right? And market continues to make a move to the upside. So looks like, looking at all the double bottoms here as I've annotated with that purple box, it looks like we got the breakout right here, breakout right there, breakout right there, breakout like little hiccups and little shenanigans, little fake out head fakes. It's a given. You know what I'm saying? It's not gonna, sometimes it'll give you smooth breakout. Sometimes it looks like do a little head fake and come right back in and then go up or something like that. But we want to understand the posture, the overall primary term trend of things, and it's valid and strong, and we want to continue to give benefit of the doubt to the buyer. So I think, you know, remainder of this year, I think we're going to continue to march higher with this micro term fluctuations. I think next year, I think if we break out of this with the nice cultivation of higher highs and higher lows, I reckon that market could continue for the month of January. You might see a little bit of rockiness again, maybe sometime in February. Obviously, we'll kind of reassess the situation at the time. So I'm bullish going into the remainder of this year with the micro-term fluctuations, maybe some short-term consolidations. But going into like January, I think I see some bullishness coming into the market. Might even see some exuberant rally to the upside. Let's go to Russell 2000. So you guys remember what we talked about last weekend when things were very, very gloomy? Remember, keep in mind, this was the last weekend right here when this thing broke. Here, let me make it more dramatic. It's like here. This is what it looked like right there. So this is what it looked like. It like broke below this support, right? People are freaking out that this massive thing it's gonna crash back down. And I think more people are more freaking out. I think, to be honest with you, I think because people are chasing a Russell 2000 up here. And then when this thing dramatically just fell, they're just like in panic. And remember, we did this quick exercise comparing that today's price session to like 2017 price action, right? Because I was trading this back in 2017. If you guys remember, if you've been following me this long, look at the little trap right there. Look at the little trap right there. Just the way it came down. Also, look at this, how like up and down, up and down, up and down, up and down, up and down. Boom! Just tanked for months straight, every single day. Why? Well, market gotta make sure to get you out, man. Market is gotta make sure to sweat you, to make sure you're, you know what I'm saying? You're distraught. You're miserable. You're extremely, you know what I'm saying, anxious about all this. All of a sudden, market just tanks every single day, in a dramatic fashion. I mean, look at here, like, oh yeah, no, it's okay. Oh, it's gonna go right back. Oh no, yeah, look. So yes, you see. All right, everything's going to go boom. And then why though? Market always follows the majority to make sure to get you out before market does this. Market making sure that you cannot become part of that. Can we expect something similar on the Russell 2000? Because it's been correcting through time. Market made sure to punish those chasers at the top here, thinking that's a breakout. Market made sure to get you out, get you to short at the lows, stopping you out. Can we see a move that can be exuberant to the upside? Keep in mind, market could still make sure to shake you out a little bit. It's never gonna, sometimes give you a smooth move, sometimes. Or more often than not, it's gonna do something. It's gonna do something somewhere. I don't know exactly how. Because the market is brilliant, insidiously clever, creating these events where like it's gonna make you doubt. Right? But I believe there's a gap here. Let's see here. There's a gap. Gap right. So that gap is gonna provide some resistance. That needs. So you know what I can see. Unless we go up and like gaps up, right? Unless we gap up above it, what I can see is this thing going up here. There could be some kind of a pullback or something. Worst case, this thing maybe even come right back down just to get people up before going back up. Again, I don't know. Please do tell me if you can see the future in the next 2 weeks, exactly how this is gonna play out. Please let me know, because I love to hear about it, because I can't see the future. But I can see that level, unless we gap right above it, is gonna provide some resist, some shenanigans or something like that. And then all of a sudden we may, so I think, we may continue to rally remainder this year. I think maybe first part of January, maybe, right? I'm just kind of giving you potential possible scenario. First, part of January, we might kind of, some shake and bacon or something like that. And then possibly a big rally that might come mid to late January. Again, obviously we'll revisit. We'll reassess the situation. But looking at the Spider and Russell 2000, the big picture of things, you know, let's go to Russell 2000 right here. You can see that that was a COVID lows. We got nice cultivation here, and then all of a sudden we just went vertical. But after going vertical, market decided it's gonna go sideways because he needs to correct through either price or time because it's tired. Bulls are tired. But instead of correcting through price, it decided it's gonna correct through time. Market doesn't know the difference. So as far as the market is concerned, bulls are not tired anymore. Bulls rested through this. So if bulls ever so much choose to make a move, we could see some big breakout to the upside as long as there is no reversal signal that may come. And obviously, you know, this is a market, this is life. Things can change. However, with the data that is at hand as of today, we have a high probability in this setup that I can see. We have a high probability of that happening going through the remainder of this year and next year. And that's what I'm saying, right? Let's go to gold here real quick. I know gold's been struggling this entire year, but remember what I said on the last weekend's video that we're still on a primary term uptrend, right? So we can see that we had a nice swift, you know, crazy exuberant rally, and after that kind of rally, you bound to see some kind of pullback, correction, sideways, basing, consolidation, all that stuff, because that's normal. It's nothing crazy. It's nothing abnormal. It's that's what it needs to do. I'll be more concerned if gold keeps going higher without a correction. So we saw that correction today, this year I'm in, right? And then now that, you know, we're starting to look at this as some sort of base, right? Obviously, bulls are not tired anymore. So now we're trying to figure out how this thing is going to break out. Keep in mind, life is hard in gold market. We got these lower highs and a resistance, but subtle higher lows make me believe that bulls are hanging around. They're just waiting before they can make their move. That's how bulls like to make a move anyway. You see bears, they're very emotional. They just like to bring it down as hard, as fast as they can. Bulls, however, the bulls, however, they like to strategically do things. They like to take their time, kind of look at the evidence of things. You know what I'm saying? Wait until the right setup is, present, and then they find a way to make their higher lows. Keep in mind, we don't have higher lows. I mean, higher lows or higher highs. What's the definition of uptrend? Higher lows are higher, right? So what we need to see, we got to see that cultivation of higher high. We don't see that. So we got lower highs, we got higher lows. So we're not in a downtrend either. Downtrend means we need to see lower highs and lower lows, but we don't see lower low. We got higher lows. So we're kind of battling in this vicinity. I think bulls are biding their time and waiting for that right setup, right moment to get their higher highs and higher lows to establish the uptrend before breaking back up to the upside, establishing, cultivating that uptrend and making a run to the upside. I think that's what it's going in the midterm. We're kind of in a neutral ground, kind of consolidating here. Obviously, in the primary long term, we're still in an uptrend. So I think at some point it's going to break back up to the upside. Let's go to Bitcoin and the video with this. Bitcoin's been struggling here, right? This gap was never filled. It hasn't been filled since this entire year. You can see that tankage came about when that gap didn't get filled. There's another down gap. There's another down gap, and with that, things been very, very hectic. So there's this up gap though still open. So I think if bulls can protect this up gap, there's a good chance that possibly get back up here and gotta fill these down gaps. And ultimately, obviously, this gap needs to be filled. If you do want to see new highs above 60s on grayscale Bitcoin, these gaps need to be, and there has to be some cultivation. We don't see any of this. We have to revisit that. Well, so, first of all, I want to thank you for your viewership. Thank you for your follows. I appreciate, you following my work and listening to my videos and analysis and tweets and stuff like that. I appreciate you guys, and I want to wish you Merry Christmas to you and your family. I'm still running my December 2021's December invitation. It's gonna be expiring in about 10 days, right? So, and this entire month of December, I've been running it. So it's continued to, I continue to run that. Obviously, there is a, special report that I've done back in late November, right? Special report, coming correction explained, right? And so this might be coming, mid next year or something like that. It's very profound, special report. You're not going to find any profound analysis that you're not going to find anywhere else. I guarantee that you're not going to find none of my analysis found anywhere else. Same with this one here. And another one that I actually that I did just last week. You can see December 16 here, right? Today's what, 23rd. So you can see preparing for the Exuberant rally. So in this analysis, I talked about that we may see that Exuberant rally that may come, maybe end of this year or even early part of next year, before we see real correction, like real, like 15%, maybe even 20% on the S&P. So obviously, with any membership, you're gonna get these reports, and at least I think if you have a good understanding where the market is overall, it will be easier to navigate this market, and you know what I'm saying, and you can prepare your portfolio in a way that you can, prepare for what's to come, and to kind of have certain plans for these, right? So, basically, right now with this December invitation, all the quarterlies are normal, regular price, but all the annuals are the currently 20% off, additionally 20% off, because them being annual, they're already 20% off rate. They're 20% off already, just being annual as an original price, because you're paying up front for the whole year, so you get 20% off on that. And on top of that, when you check out, there will be extra 20% off on there. So on top of, that's the annual memberships for all of them, either investor, premier, or VIP, right? And so if you've been thinking about it, and obviously this membership is going to expire in about 10 days, right? As a member, obviously you'll know exactly what positions I'm currently holding, what positions I'm currently buying. I've been actually buying new positions this week. Leverage ETFs, some commodities, some stocks, some options, and things like that. And so, and obviously you get updates on that. And then obviously, depending on which levels you do get, there will be reports. Like if you do either, Premier or VIP, there will be weekly reports where I would go through all of my current holdings and analyze them, every single one of them, and see like what I'm going to do with it, how long I'm going to hold, where's the next target, where I'm going to buy more, I'm going to sell some, or you know what I mean? So those are reports. And there are other reports, obviously, if you do investor report, semi-monthly report, which I just finished the semi-monthly report today. Just today, this morning here. So this was, I just did it today. This is semi-monthly report, December 23rd, Christmas challenge, 30-minute, 90 tickers analysis. So 90 tickers, and those 90 tickers obviously including like my index funds, my triple shares, leverage ETFs, commodities, precious metals, all those positions, and equities. All of that I went through, and it was challenged for me to analyze them in 30 minutes for 90 tickers. Obviously, some of these videos are going much, much longer, detailing what's going on, what I'm going to do, what are the plans, are some of these levels good to purchase, accumulate. So that was done earlier today for members. And so obviously, all members will have access to semi-monthly report. And so, think about it. We still got time here till December, end of December to sign up. And after that, after this, December invitation expires, there will be no more 20% annual membership. Again, on top of what already rated, discounted rate, 20%. And so, well, you know what? thank you so much, guys, for again for your follows, views, and you know, watching my videos every single day. And it's a long process for me to do these videos but you guys enjoy this Christmas week. Enjoy your Christmas day with your family and friends, and enjoy your Christmas weekend. And I'll come back for you, right? We'll reassess the situation, right? And have a wonderful weekend. And I'll talk to you next week.